You know what billionaires are buying? Gold, Bitcoin, real estate, stocks. Everyone knows this. Financial media covers it obsessively. Gold hits $4,000 per ounce, and every outlet reports that hedge funds are accumulating. Bitcoin approaches $100,000, and the narrative becomes that the ultra-wealthy are diversifying into crypto. Real estate markets surge, and suddenly we're told billionaires are snapping up properties. This is the public narrative, the mainstream story. The assets everyone talks about, everyone analyzes, everyone thinks they understand. But here's what they don't tell you. While financial media obsesses over gold and Bitcoin, while retail investors chase the same assets billionaires bought 5 years ago, the ultra-wealthy have already moved on. They're accumulating 3 assets you've probably never heard of. Assets so obscure that most financial advisors couldn't explain them. Assets so essential that they'll become more valuable than gold when the system breaks. And they're doing it quietly. No press releases, no CNBC interviews, no tweets. Just systematic, relentless accumulation through shell companies, private transactions, and legal structures designed to hide ownership. I'm going to show you exactly what these 3 assets are, why billionaires are accumulating them in 2025, and most importantly, how you can get exposure to the same assets without needing $1 billion. Because this isn't about copying what rich people do. It's about understanding where real value concentrates when currencies fail, when supply chains break, when the financial system that held the world together for 80 years finally cracks. Let me start with the first asset, and this one will surprise you because it sounds boring. But boring is exactly what makes it powerful. The first asset billionaires are quietly buying is farmland. Not just any farmland, specific farmland in specific regions with specific characteristics that most people don't understand. And the person who so accumulated more of it than anyone else in America is someone you know very well. Bill Gates. As of 2025, Gates owns approximately 275,000 acres of farmland across the United States. That's 430 square miles, bigger than Los Angeles, roughly the size of Hong Kong. One man, through his investment firm Cascade Investment, owns more private farmland than anyone in America. He's been accumulating it systematically since 2013. But the interesting part isn't how much he owns, it's what he owns. Because Gates isn't buying random farmland, he's buying strategic farmland. Land with 3 irreplaceable traits: exceptional soil, reliable long-term water access, and climate resilience. Louisiana's Mississippi Delta, with soil shaped by thousands of years of river deposits. Arkansas, farmland with long-term water stability. Nebraska land sitting atop the deep Ogallala Aquifer. Washington's Columbia Basin, with powerful irrigation infrastructure. Florida's year-round agricultural belt, capable of multiple annual harvests. Every acquisition fits the same pattern. Land that can still produce food even when climate pressure reduces global agricultural capacity. Land that sits on water, reserves that will outlast drought cycles. Land that will matter more in the 2030s than stocks or cryptocurrency. Gates isn't buying farmland to grow food today, he's buying the capability to control food production tomorrow, when climate, scarcity, and supply chain failures make farmland one of the most valuable assets on Earth. And he's still buying. In 2025, his firm purchased another 8,000 acres in Washington for over $131 million, paying nearly 4 times the national average for farmland. Why? Because the properties included water rights and mineral rights, assets far more valuable than crops. And that brings us to the second asset. Billionaires are accumulating. Not water. Water rights, the legal right to extract and use water. In the western U.S., water rights are completely separate from land ownership. You can own thousands of acres and have zero legal access to the water beneath it. Under the prior appropriation system, senior water rights from the 1800s get priority, even during droughts. Junior rights can be cut off entirely, and these rights can be bought, sold, leased, and transferred. Which is exactly why the wealthy started buying them decades ago. T. Boone Pickens saw this first. He bought land in the Texas Panhandle not for farming, but for the Ogallala Aquifer beneath it. He secured rights to pump 65 billion gallons of water per year, enough to supply a major city. He sold a fraction of those rights to 11 cities for $103 million. Not the land, not the water, just the rights. His remaining rights are now worth over $500 million. Wall Street firms like Water Asset Management are doing the same in Colorado, buying farmland purely for senior water rights that are worth 6 times more than the land itself. In California, the Resnick family controls the largest private water bank in the state, determining who gets water during droughts and at what price. They've made billions. Even the Mormon Church is in the game, spending $200 million on Washington farmland solely for its guaranteed Columbia River water rights, outbidding Bill Gates himself. Private companies are still trying to consolidate water rights across entire watersheds, despite public backlash. Why? Because every climate model shows water scarcity accelerating. Snowpacks are shrinking, river flows are dropping, aquifers are being depleted. In the 2030s and 2040s, the most valuable resource in America won't be oil or lithium, it will be water. But here's where things get even more interesting. Catastrophe bonds are only one part of a much larger strategy the ultra-wealthy are building. They're not just hedging against disasters, they're positioning themselves to profit from a world where disasters become predictable, frequent, and financially weaponized, because cat bonds aren't just tied to hurricanes and earthquakes anymore. The market has evolved, it has widened, matured, and multiplied into an entire ecosystem of instruments designed for one purpose: turning instability into income. But here's the part most people never realize until it's too late. When billionaires start buying obscure assets quietly, not promoting them, not bragging about them, not discussing them publicly, it's because those assets are no longer investments. They're insurance, they're leverage, they're power, farmland, water rights, catastrophe bonds. Think about what these 3 things really represent. Food, water, risk. These aren't financial categories. They're the 3 pillars of civilization. Remove food and economies collapse. Remove water and societies vanish. Remove risk protection and the global financial system implodes. The ultra-wealthy understand that the next great shift won't be technological. It won't be political. It won't even be economic. It will be civilizational. And they're positioning their capital around the foundations that every civilization, ancient or modern, ultimately depends on. Because the world is not heading for a normal business cycle. It's heading for a structural transformation. A restructuring of what society considers safe, secure, and valuable. And the truth is, the world is already showing signs of strain. Water restrictions across major U.S. states, the Colorado River shrinking to record lows, insurance companies pulling out of California, Florida, and the Gulf Coast, billion-dollar natural disasters happening every few weeks, global crop failures tightening supply chains, food inflation climbing even when other inflation falls, insurance premiums tripling and still failing to cover the risk, governments overwhelmed by climate-related payouts, infrastructure built for the 1960s collapsing under modern stress, mega droughts, mega fires, mega storms becoming yearly events, coastal cities sinking, literally, under their own weight, entire regions becoming uninsurable, and global migration patterns shifting in real time. We're entering an era where the systems built after World War II, water, food, insurance, power, logistics, agriculture, are no longer guaranteed. But this is the part nobody talks about. When systems break, value doesn't disappear. It moves. And billionaires are positioning themselves exactly where that value will migrate. If food production becomes unstable, who wins? Farmland owners. If water becomes scarce, who wins? Water rights holders. If disasters overwhelm insurers, who wins? Investors holding catastrophe bonds. This is why the ultra-wealthy aren't chasing the same assets as everyone else. They're buying what will matter when everything else stops working. And the crazy part? You don't need billions to understand this trend. You just need to see what they see before the rest of the world sees it. Because history is very simple. The people who prepare early become the new elite. The people who wait become dependent on the elite. The wealthy aren't waiting for the future. They're buying strategic control of it. Quietly, methodically, relentlessly. And now that you know the pattern, the only question left is, will you ignore it like everyone else? Or will you act before the world catches up? Today, cat bonds cover Wildfire seasons across California, Australia, the Mediterranean, earthquakes in Japan, Mexico, and the western US. Severe European floods, Atlantic hurricane clusters, typhoons in Southeast Asia, mortality events, including pandemics, extreme winter freezes, and even cyber catastrophes that cripple critical infrastructure. The wealthy aren't just buying protection, they're buying exposure to global instability. While most people see chaos as risk, the ultra-wealthy see chaos as a yield. And it's working. Over the past decade, despite multiple record-breaking disasters, cat bond returns have beaten traditional bonds, beaten REITs, beaten emerging markets, and beaten most hedge funds. And the demand is accelerating because insurers, already strained by climate change, can't shoulder the risk alone. This is why billionaire families, sovereign wealth funds, and corporate treasuries are increasing their allocations. They know insurance companies are reaching their limits. They know governments can't subsidize every catastrophe forever. They know capital will flow toward whoever can absorb risk profitably. That's exactly what catastrophe bonds are designed to do. And here's the part almost nobody understands. Climate models don't just predict more disasters, they predict more predictable disasters. Meaning, the frequency rises, the severity rises, but the uncertainty falls. For insurance-linked securities, uncertainty is the enemy. Predictability is the jackpot. As catastrophic patterns become clearer, pricing improves, yield accuracy increases, and sophisticated investors gain an edge. This is why cat bond hedge funds are hiring data scientists, meteorologists, geospatial analysts, hydrologists, climate physicists, and AI modelers. They're not guessing. They're modeling. They're redoing for climate what hedge funds did for equities in the 90s, turning data into dominance. And that's why billionaire investors are obsessed. Because cat bonds are turning climate risk, something everyone fears, into a high-yield asset class that grows stronger as the world gets more dangerous. But the story doesn't end there. Cat bonds are now part of a much bigger global shift, the rise of resilience investing. Resilience investing is the idea that the biggest financial opportunities of the next 50 years, 1T, come from growth markets. They will come from protecting society from collapse. And the wealthy are positioning themselves early. They're buying farmland that still produces when global agriculture fails, water rights that become priceless during scarcity, catastrophe bonds that pay out when the world breaks, infrastructure tied to grid stability, desalination, and energy storage, disaster recovery companies, climate relocation developments in safe zone states, farmland in northern latitudes expected to become prime growing regions, private energy, microgrids that stay online when the main grid collapses, companies specializing in rebuilding after hurricanes, fires, and floods, inland logistics hubs replacing vulnerable coastal ports, off-grid communities engineered for climate security, agricultural AI tools that thrive during crop volatility, and strategic minerals required for rebuilding after extreme events. Billionaires aren't preparing for the future, they're preparing to own the future. Because when systems fail, when storms hit, when droughts worsen, when insurance collapses, when food prices surge, when water becomes scarce, when migration reshapes entire regions, those who control resilience assets control everything. They control housing, they control food, they control water, they control risk transfer, they control reconstruction, they control survival. This is the unspoken truth about billionaire investment strategies in the 2020s. They're not betting on growth, they're betting on collapse, and positioning themselves to profit from what comes after. The wealthy don't see catastrophe as chaos, they see it as an investment category. And once you understand that, you understand the real battle emerging beneath the surface of the global economy. Those who prepare for instability will rise. Those who assume stability will fall. This is why billionaires are accumulating the assets no one is talking about. This is why they're moving quietly. This is why they're paying premiums no ordinary investor would understand. This is why they're building systems for a world most people still deny is coming. They're not waiting for the future. They're buying it now, piece by piece. And the door to these opportunities is still slightly open, but not for long. Because once mainstream investors finally wake up, once governments realize they're losing control, once scarcity goes from theoretical to personal, The window closes, and the people who saw it early, they don't just survive change. They own the world that emerges from it.